Presented by CoinDCX, your gateway to crypto.
Hello and welcome to the Business Today show. I am Udayan Mukherjee. Shipping is one of the most cyclical industries globally. But thankfully right now, what's going on is a boom in shipping stocks. And that's because of the kind of disruptions that the Ukraine war has brought to the fore, and the spike in crude prices has led to a boom in the tanker freight trade. And to talk about this industry, I have with me a doyen of the first family of Indian shipping and the managing director and vice chairman of India's largest private shipping company, Great Eastern Shipping. Bharat Sheth is my guest on the show today. Bharat, it's good to see you after a long time, and thank you very much for joining in today.
Thank you, Udayan, and thank you for having me on your show.
Well, your shareholders will be a very happy lot, Bharat, after a long time, because the GE shipping stock hits new multi-year highs every week. Do you see these good times sustaining though?
So, Udayan, in shipping, as you know, it's a commoditized play, and so you will have, good markets and you will have indifferent markets. And the real point is shareholders should always be happy, because the way that we are positioned, we have great operating leverage in strong markets, and that's when you make all the money. And because of the fact that we are close to zero net leverage, even if the markets were to turn ugly, we would be in a position to expand considerably. So I guess at the end of it, good markets or bad markets, we are very well positioned as a company.
How do you keep such a calm countenance, Bharat, and carry on in a market which is as cyclical? I mean, you're probably understating it when you said there will be good markets and indifferent markets, but the shipping market is so cyclical. I mean, there have been huge ups and huge downs. Over the decades, how have you dealt with these ups and downs of such cyclicality?
So, Udayan, over a period of time, you just get used to it. I think when I initially joined the business, I myself was pretty shell-shocked to see the kind of volatility that we've had in our industry. And if you look at some of the data, in the course of 5 working days, you can have the markets up 30-40% or down 30-40% in the same week. And week after week, you have sometimes this level of volatility. And I think once you're long enough in shipping, you get used to it, and you just take the good and the bad.
Yeah. You actually do come from, as I mentioned in my introduction, the first family of Indian shipping. I mean, you have legends like K.M. Sheth and Bharat Sheth in your family as elders. I mean, give us a flavor now that you are talking to us about the earlier days when you joined. I mean, what was your breaking into the shipping industry like? And if you can illustrate with some anecdotes, what kind of interaction you had with elders who were who were basically the pioneers of Indian shipping?
So when I joined the business, which was sometime in the early to mid 80s, I think both my uncle and my father insisted that I train, from ground zero. And so I've really trained myself from, visiting the ports, going on the ships, seeing how cargo is loaded and discharged, attending vessels under repairs, attending vessels when they were being built. And so I learned new building, and bit by bit I learned about the different aspects of the business. They obviously were also kind enough to allow me to sit in to some of the bigger meetings where they used to decide or determine on what ships to buy, what ships to sell, when do we fix, when do we not fix. So I've really been through all the grind that it all involved, and bit by bit you start taking greater and greater responsibility, and then eventually your own confidence level increases, and that's when you start taking independent decisions. And I think that is how gradually it moved from, coming in as a trainee to then taking more responsible decisions over time.
Do you sometimes miss their counsel, or is the business very different from what it was back in the day? Has it become more complex, more international? It's not quite how your father or your uncle would have run the business then.
Yeah, so it's become very different because when I joined the business, I think we were very, very India-centric, and most of our customers were based in India. And if you see now, I think last year, and I'm just going by some memory, almost 60 to 70% of our revenue came from international customers. And I think even the way we have now positioned ourselves, I guess for us India is now another destination, just like any other large country is another destination where we move cargoes to and move cargoes from. So to that extent the business has significantly changed, and also in terms of the learning, we actually also learn a lot from mistakes. It's not that we don't make mistakes, and I would say if you were to ask me what has been my greatest learning, it's from the mistakes that I myself may have made in some of the decisions that I have taken over the last so many years.
Right. Now, the obvious question to ask you, Bharat, now is that given your dominant position in the shipping industry in India for so many decades, did you ever consider that, just to hedge yourself against the cyclicality of this business, you could get into some allied businesses? Because, there are opportunities opening up in defense over the last many years. Ports itself has exploded, and some very large corporations have exploited that opportunity. And there is, of course, shipyards, which is some kind of linkage to the shipping industry. Could GE Shipping not have moved into any of these businesses, if only as a kind of a hedge against the core shipping business, which is cyclical?
Yeah, so why, could we have looked at more stable businesses? The answer always is yes. But I think we have all been brought up to really play the volatility of shipping, and I think at the end of the day we enjoy this volatility because when you get bad markets, that's when you can also make a lot of the money. You also make a lot of money in the good markets. And once you've been in shipping and you've seen the volatility and understood the volatility better in shipping, I guess many of the other businesses which have much more stable income become a little dull for us.
So are you saying that areas like defense or ports don't excite you? I mean, you would not consider any kind of forays into any of these opportunities in the future too?
So again, I think we can do a lot more in shipping itself. We are currently in 4 sectors, and even in the 4 sectors that we are in, by global standards, we are more a medium player than a significant player. And then there are areas of the business which we would like to look at some point. One of them clearly being containers, one of them being LNG. These are areas that we haven't got ourselves into, and it is something that we would like to look at when the opportunity presents itself. So there is, I think, a lot more that can be done within what I would call our core competency. So we'd rather exploit that.
No, I only ask because the only issues of capital allocation, because you churn out quite a bit of cash, and when asset prices are very inflated like they seem to be now, with your purchasing or adding to your fleet, you then are often in a bind. As I find you in, because you seem to be doing buybacks serially, because that's one way of enhancing shareholder value by deploying cash, which you cannot use or choose not to use by buying fleet at this point in time. So how do you look at the capital allocation conundrum from your point of view, given the way assets are priced today?
So Udayan, the way, we've looked at a lot of back data, historical data, and what we found is that even if you sit on cash for periods of time, 3 years, 4 years, so long as you buy correctly, a cheap ship is a cheap ship for all its life. And what we found is that eventually, so long as if you buy sensibly, you make up for the time where you have sat on the cash, number one. Number two, on buybacks, as you may be aware, often we have traded at a discount, and at times a significant discount to book value as well as to net asset value. And we have therefore used buyback as a process of capital allocation, because basically when, let's say, $1 of steel is valued by the equity markets at 50 cents or 60 cents or 70 cents, it obviously makes more sense to buy paper than it makes to buy steel. Everything being equal, our preference would always be to buy ships over paper. It's just when the discounts get exaggerated that we then prefer to buy paper vis-a-vis steel. And when I say steel, I mean ships.
Now, I take your point that today ships are too expensive to buy and buyback seems the more prudent way. But could such an opportunity of asset allocation in your core business be coming up in the government's divestment of Shipping Corporation of India? If the price is right, would you consider that very seriously? Because that could be plum assets for the taking, maybe at not as inflated a price as the market is or where the market is today.
So on Shipping Corporation, I think one of the reasons why we did not show much interest is because we also looked at the kind of assets that they owned, and not all the assets fitted into what we wanted, number one. And number two, there was also this whole issue of a cultural fit in the way that we've run our businesses and maybe they've run theirs. And we just felt that size itself was less important than buying the right asset. And we just thought that it should be possible over a period of time to get whatever asset acquisition that we would like to take through the secondary market. There are thousands of ships in the water in the world, and today prices may be elevated and tomorrow they may not. So whenever the timing is right, we'd rather cherry pick what we would like to own rather than do one big acquisition.
Does the prospect of growing private competition worry you, Bharat? Because these days the group which is getting into pretty much anything is Adani. You've sat on Adani Ports' board, you know that company well, and Adani is already talking about doing coastal shipping of a kind of its own. What if they were to acquire large assets and get onto your turf? It's not happened in the past, a serious challenge to your dominance, but do you fear that it might happen in the future?
So, as I explained, Udayan, our business, the way we are now positioned, we are much more of an international player than a domestic player. In fact, if you see our current presence on the coast, it's next to nothing. And therefore, we'll benchmark ourselves against, what size of companies are there globally. And as I was telling you earlier in our talk, that we are a medium player. We are by no definition a very large player. So there's a lot we can do globally. and that's what we intend doing. So, and at the end of the day, in shipping, because it is so fragmented a business, your competition comes really from the ship that is competing with you on a particular cargo. So it's never really a company that is competing with you, it's the ship, it's an individual ship that competes for the cargo. And so really these things are of zero concern.
Time for a quick break now, but we shall return with Bharat Sheth, Vice Chairman and Managing Director of Great Eastern Shipping, after this break.
节约人力，可以节省我们这个核酸检测人员的劳动强度，同时呢，它也大大提高了安全性和准确性。它结合它的视觉算法呢，能精准地找到人的口腔和核酸检测的地方，而且呢，利用它的触控和力控系统呢，也能很轻柔、很敏捷地触碰到人的核酸检测的点。
Welcome back. You're watching the Business Today show. I've been in conversation with Bharat Sheth, Vice Chairman and Managing Director of India's largest private sector shipping company, Great Eastern Shipping. Now, it's an interesting juncture in the shipping market today, because on one hand, tanker rates are going up, which is where you're making most of your money because of the way crude prices have gone up. But on the other side, dry bulk rates are going down because of fears of recession globally, and that's taking away from your profits. How do you read these two divergent trends in your two main lines of business, tanker and dry bulk?
So dry bulk, if you just rewind 12 months, right? So if you take the averages of Cal 21, it was really dry bulk that produced the bulk of our profits and not tankers. Tankers, in fact, on an average, earned some of the lowest earnings of the last 20 to 30 years. This year, Cal 22, if you take the period from Jan to June, dry bulk was also doing very well. In fact, dry bulk, until the outbreak of the war, dry bulk was clearly outperforming tankers on average earnings. The war, I think, changed that in favor of tankers, and from the months of, I think, March or April, I'm not sure of the exact month, but the tanker market started improving considerably, and it went up in leaps and bounds. The dry bulk, on the other hand, had decent earnings till I think it was June or July, and now that has begun to come off, and I guess dry bulk earnings will remain challenged going forward. We can't forecast for too long, but just if you ask me at the moment, clearly the tankers are in a very sweet spot, the dry bulk is not, and these things can change again. So the one big benefit, Udayan, for us is that because we are so well diversified into 4 different sectors, and if you include offshore, that's 5 sectors. Sometimes, one sector does well, one does not so well, and eventually, one supports the other. So it's fine.
It is, but through this conversation, the one recurrent theme is that the impossibility of looking too much into the future to predict where prices will be, where trends will be. I mean, has that become sort of ingrained in your head? And do you sometimes smile in your head when people or economists or market forecasters or any kind of trend forecasters make promises into the next 1, 2, 3 years? And because you would know from experience that the future is absolutely uncertain and it's impossible to predict anything, right?
You're quite right, Udayan, and it's, honestly, I've stopped reading any of these forecasts, particularly whatever comes in our industry. You may read it for intellectual debate and arguments and just to, pretend you've got knowledge. But at the end of the day, you've got to remember that shipping is an event-based business, and who can forecast the events that may unfold? So we don't any longer try to forecast what's going to happen next month or 2 months from now or 1 year from now. And even in our investor calls, I always now tell our whoever takes the trouble to listen in to the calls that we are really not in a position to forecast what's going to happen going into the future, be it for 1 month, or obviously the longer out you are, the worse the forecast gets. And the real trick is, just having a stack of assets in multiple parts of the world, and you'll try and average out some good businesses, some not so good businesses, and we just look at what is likely to be our average earnings across our asset classes.
Right. Which brings me to the sector or segment of offshore. How do you read that business? Because there's been such chronic underinvestment in the fossil fuel business. Do you think that might have bottomed out with the way crude prices and with the Ukraine war now? Do you think the offshore rig business might start looking up?
So then it already is beginning to look up, both for the rigs as well as for all the support services that go to support a drilling operation. And we think, and I think I also mentioned this in our last investor call, that the worst of that business is possibly behind us. As you rightly pointed out, there have been 6-7 years of underinvestment in this sector. Very, very little has been built, and we are seeing utilization rates go up both for the rigs as well as for the services that support the rigs, which is the ports predominantly. And we think that this trend is likely to continue, and if so long as oil remains in the around the $100 mark, and it appears that it's likely to be so, I think better days lie ahead.
Finally, let me ask you, Bharat, I mean, you're part of such an old and well-known Bombay business family, I should say Mumbai business family, and you would know everybody in the business and everybody would know you. But having rubbed shoulders with so many prominent and successful business personalities over the years, I mean, who do you consider an inspirational leader whose life and moves that you've taken a leaf out of in your own management style or in your own career? Who would you say has been a trailblazer for you? I mean, a kind of a person that you look up to.
This is a tough one, Udayan, and I've not really thought it through very carefully. But I think rather than, talk of A individual or B individual, I think maybe, if you look at it in terms of a corporate house, the one corporate house that immediately springs to mind is the house of Tatas. because over multiple years they have managed to create a very strong brand in terms of integrity, in terms of reliability, and across so many businesses. So it's like, I don't know exactly how many businesses the house is in, but I'm aware that they are in multiple businesses, but they all operate like one heartbeat. So it's thousands of employees across the group, but one, what you may call a Tata heartbeat. And that's incredible to create and preserve that over multiple years. So I guess they are the people you would look up to.
Bharat, it's been wonderful hearing your story and catching up with you after so many years. Thank you very much for your time today. I wish you well.
Thank you, Udayan, and thank you for having me on your show.
The prices of commodities and goods have risen over the past few months. If China-Taiwan tensions escalate, it is likely for more goods and commodities to get expensive. We saw how the Russia-Ukraine crisis increased prices of everyday goods like sunflower oil. Same is likely to follow in case of China-Taiwan. So what will be expensive in India? India depends on China and Taiwan for many of its imports. Let's take a close look at this. In 2021, India imported goods worth $125.6 billion from China. These include integrated circuits, laptops, computers, oxygen concentrators, and vehicle parts. Imports from China has increased by 45%. But due to the border disputes between India and China, over 50 Chinese apps continue to stay banned. But what does India import from Taiwan? Taiwan plays host to 20% global supply of semiconductors. And in the last 10 years, India has exported $58 lakh worth of commodities from Taiwan. Here are some of the commodities that India imports from Taiwan: electrical machinery, plastic and its articles, nuclear reactors, organic chemicals, iron and steel. All these raw materials are used to make final products. If there's a war between China and Taiwan, it is likely for these goods and services to get even more expensive than they already are.